What we're seeing now is that almost all of the gold and silver plays are a little bit like cryptocurrency. So all of a sudden we're seeing everything where people were fearful. All of a sudden there's just massive sell-offs, which can cause you to lose a fortune.
Gold dealer Max Baker tells Fox Business we're just another shocking global event away from prices heading much higher.
So historically, gold and silver, a lot of commodities, have been used as a cushion or a safeguard against American equities. It used to work. I'm not going to say it was inversely correlated, but usually if the market was falling off a cliff, it was crashing, then gold and bonds and silver would do a little bit better. Now, what we've seen recently, though, is there is a tremendous amount of speculation in precious metals, a ton. As a matter of fact, if you're watching any of the financial stations on television, my guess is in any given hour, there are 2, if not 6 different commercials for some guy trying to hawk you, gold and silver reserves and keep it in their, vaults or whatever, nonstop. So the thing of it is that, and we, in our office, we call them gold bugs. There's a lot of gold bugs out there. And to be honest with you, gold has done really well over the past, 7 or 8 years. It's done exceedingly well. So it's hard for someone that has had that gold bug itch. It's like, I'm just fearful, John, everything's going to fall apart. Let's put all of our money in gold and silver. Well, what we've seen is a ton of people have done that speculatively, and now the prices of gold and silver have kind of gone through the roof, realistically. So we're going to see a lot more volatility in gold and silver. And the question is this. The question comes down to, if we want ways to protect our savings, why would we go to another volatile asset like gold or silver or things like that, right? So the question would be, if we want to protect ourselves from a major downturn, why do we want something that can also go down at the same time? The correlation isn't as strong as it used to be. And correlation means when something goes up, something else typically goes down. Or when something goes up, the other thing also goes up. That's correlation, where you can see the trends and they'll go one direction or the other. What we're seeing now is that almost all of the gold and silver plays are a little bit like cryptocurrency. So all of a sudden we're seeing everything where people were fearful. All of a sudden there's just massive sell-offs, which can cause you to lose a fortune. And if you don't believe me, talk to any of your friends who owned a bunch of cryptocurrency. In the past several weeks, we have watched Bitcoin, and we do not subscribe to invest in Bitcoin, but I know people that do, and they talk about it all the time. It was over $100,000 a share, I guess, or whatever they call it, or a unit, if you will, Heather. It's dropped to below $60,000 per share. So people have lost 40 to 50% of their money in Bitcoin just in the last several weeks. But the reason I heard everyone wanting to invest it in the front end, if you recall, because it's very different in the U.S. economy. It's very different than the stock market. We're using it as a safety valve, if you will. Well, that safety valve has cost a lot of people a fortune, if you will. So the thing to understand from all this gold and silver talk, do I think that gold is a good investment? I do. For 3 to 5% of your portfolio. We never, ever, ever, ever want to look at precious metal as truly an investment that we can live off of in retirement. And Heather, if you think about it, why is that? Because someone would say, well, John, my gold portfolio was at 42% last year. Very true. But now that you have that 42% extra, how do you get income from that? It doesn't produce a dividend. Gold doesn't pay you a dividend. So they're going to have to sell some of that gold in order to take the profits to turn into income, right? Well, that sounds to me like what you're doing is you're buying high and selling hopefully higher. And that makes me kind of nervous. So when we're talking about income that we can live off of and rely on, we want it to be producing its own income. Like what? Well, Social Security. If we paid into Social Security, it's a social program, but if we paid into it, then at some point in time, it's going to start giving us a paycheck, right? For whenever we turn on Social Security, we're going to get that paycheck. If we own a dividend-paying stock, we bought, let's say, Procter & Gamble, just making one up. And Procter & Gamble, let's say, pays a 2% dividend. Well, whether or not we sell that Procter & Gamble stock, we're still going to be getting that 2% annual dividend. We can spend that. We can do what we want. If we put our money in the bank, we can typically spend that bank interest and not deplete our principal. Those are the things. Oh, and especially if you own real estate. So you bought a single family home and you're renting it out and you spend $100,000 on that property, but it's giving you $1,000 every month. You don't have to sell that property to be making that $12,000 a year. It just happens. So when it comes to retirement income, we want things that automatically generate the income. We don't want to think that we have to sell assets in order to produce an income stream. And that's why I don't like too much of a concentration in precious metals, especially gold and silver, going into retirement. 3 to 5% is great. If you are really, really, really jazzed about the idea that the market could plummet and you think gold's going to be good, maybe you could go up to 10 to 15% of a portfolio, but any more than that would be unwise. And the main reason for it is if you look over the past 100 years, gold has averaged around 5 to 5.5% of actual growth. The U.S. stock market has done much better. And of course, we know the markets go up, the markets can also go down, but including those ups and downs, the broad market has done a lot better than gold. And right now, gold's just very expensive. So the thing to think about when you're looking at all this gold and silver stuff is, do you own it already? How much have you gone up? Should you pare back that position a little bit, right? And maybe buy some things that are on sale now, or you can lock those into a guaranteed investment or a guaranteed savings account at the bank or something like that. Or you could consider doing what I mentioned earlier, and to put those assets in something that's going to truly spin off an income that's going to be consistent and usable. If you do those things, that's like a way to kind of win in the long run with what maybe, in my opinion, maybe a little bit of luck on the fact that gold's gone up.
Obviously, the idea of an alternative investment, I mean, correct me if I'm wrong.
Sure.
Gold and silver, precious metals, that's the idea behind them, right? It's something that's not a stock, but
Absolutely.
It's still an investable asset. So if you think we need to proceed with caution, particularly when it comes to our retirement savings with gold and silver, but we do want alternate options, then what should we consider? What can we be looking at?
Well, there's all kinds of things. It depends on if we want to err on, or if we want to gravitate to the side of more safety, or if we just want to if we want to go to a side of just not as correlated to only U.S. equity stocks, right? I mean, if you look at the broad stock market, the S&P 500, really it's only about 25 companies that did really, really well last year. 25. The rest of them were either okay or not very good at all. As a matter of fact, in 2025, which was a good year for the markets, it was up over 16%. 190 companies were down last year of all those S&P 500. So the point is that if you just don't want as much correlation, you can consider those assets. But other alternatives, real estate, very attractive. There are all kinds of liquid alternatives now. You can consider the usage of annuities if you wanted to. Why would I say that? Well, because if we're thinking about retirement income, and if you want to be certain that you can't run out of money and you're looking for something to safely protect your income and your future asset, annuities are something that can consider that. Now, they're also very polarizing. There's a lot of people out there saying annuities are the worst thing on the planet. There's other people that say they're the best things in the world. I don't agree with either side of that. Those are very polarizing. But if we're looking at something that can completely protect your downside against loss, they're exceedingly less expensive to own, because many of them you don't even have to pay to own an annuity type structure, or even some secured notes. You don't have to pay for that as an advisory fee. So they can be very attractive to buffer the downside of a market. And the good news is that just like bank CDs, you can find them attached to interest rates that are still very elevated. You still may be able to get a completely safe asset class that can get you 4, 5, 6, 7, even 8% a year of secured income that you can spend. Now, all annuities are different. This is not saying one's better than another. This is why you always want to sound off with a skilled fiduciary-based advisor who can find out, because for some people, annuities are horrible. They would be terrible fits for their portfolio. For others, it may even be substantially better than some of the gold or silver that they currently own, or for divesting of real estate, right? So, but there's a lot of considerations. What's your tax situation? Is the money taxable, tax deferred, or tax free? Those do matter in that situation overall. But as far as alternatives go, we're going to see, especially over the next couple years, we're going to see a lot more alternatives. There's all kinds of stuff that they're now trying to bring to market. Some of it could be very attractive, but some of it's just sexy, but it's not going to, in the long run, be very good for investors. So you just want to make sure that everything you own in your portfolio, you want to know the why. Why do you own it? What's its purpose? And for me, the closer we get to retirement, I want that purpose to be to safeguard a portion of my assets and to give me a spendable income stream. The closer it gets to achieving those two, the better off it is to have in your overall portfolio. And frankly, diversification kind of works on its own as long as you own, 10 to 15 different types of things over the course of all of your investments, whether they be CDs or money markets and stocks and exchange traded funds and real estate and gold. All those things can play a small part of a portfolio. You just want to make sure the lion's share has some form of protection and can give you an income stream.
When it comes to your savings, your assets, your portfolio, you want to know what you've got and why you got it. What is it doing for you? If you don't have that clarity, especially as you're getting close to retirement, John and his team, they are here to help you go through that. Do a full review, a full x-ray of your savings, your investments, your assets, so that you can have that understanding. It's your money after all. It's your future. You deserve that at the very, very least. So at J. Hagan Capital, they're here to help. RetirementSolutionShow.com is where to go to start the conversation. If you have questions about precious metals, gold and silver, how they apply to your savings or don't apply, or other asset classes like John has been pointing out, he and his team, they're here to help you get some answers. So click on the links we got posted in the show notes or visit us at RetirementSolutionShow.com.